Okay, let's continue our discussion of payroll-related liabilities. We had one video already. Now we've got our second video going. And we've got one more little multiple choice question at the bottom of this page. So we'll go ahead and take care of that. It says, which of the following taxes are employers required to withhold from employees? Okay, required to withhold. We have four choices. We've got FICA tax, that's choice A. Choice B is FICA tax, as well as state and federal unemployment tax. We've got state unemployment tax and federal unemployment tax. Okay, well, we need to understand what FICA tax is. FICA tax is the official rate is 6.2% for Social Security and 1.45% for Medicare. And by and large, these are required to be withheld. Okay, they are required to be withheld. So we know that FICA taxes must be withheld. If that's the case, choice A or B could be correct because they both have FICA tax. But choice B says, and state and federal unemployment taxes. Now, this question could have been a lot trickier if we would have made this just regular state and federal income tax. But we didn't. We made this an easier question. And so what we call state unemployment tax, or SUTA, and what we call federal unemployment tax, or FUTA, okay, these are responsibilities of the employer, but these figures are never withheld from employees. So for choice B, this is wrong, and this is wrong. And then if we look at choice C, well, choice C is state unemployment tax, and choice D is federal unemployment tax. So the only correct answer is A. Let's switch out the paper and see what we have. Move down, okay. Let's see what we've got here. It says here, the following totals for the month of June were taken from the payroll register of Young Company. And we have here, looks like we've got salaries expense, $15,000, that's gross pay. We've got Social Security and Medicare taxes withheld, $1,125. Income taxes withheld, $3,000. Retirement savings withheld, $500. And then salaries subject to federal and state unemployment taxes of 6.2% amount to $4,000. Okay, we have to be careful on this. And we also have to be careful when we read this question. It says the entry to record the accrual of employers' payroll taxes would include a debit to what? Okay, so first thing we want to understand is that whatever the answer is, it's going to have to be some type of an expense. Okay, and we have that in choice A, C, and D. And it's also the correct account, payroll tax expense. So we know that we have the proper expense account in A, C, and D. The question is, do we want to use the figure of $24.98, $13.73, or $3,000? Okay, B is wrong, because it says the employer's payroll taxes. So B is going to automatically be wrong, and I'm not going to get into why, but it's wrong. What we have to look at are, what are payroll taxes? Social Security and Medicare taxes are definitely payroll taxes. So we need this $1,125. Income taxes are just that, they're income taxes, they're not payroll taxes. So we're gonna mark that out. And then retirement savings, this is a liability that we're gonna have to somebody, but they're not payroll taxes. Well, I don't see 1,125 as one of my choices, and if I were to take 1,125 and add it to 4,000, I don't see that either. And that's because what I need to do here is I need to multiply this 6.2% times 4,000. So let's see what we have here. If I can get back over here to the calculator somewhat painlessly. Let's see here. Let's bring this over here. And let's look at 0.062 or 6.2% times $4,000. That's $248. And this absolutely is an employment tax. So what we can say here, this is 248. If we add 240 to 248, 1125, we're going to come up with 1373. Okay, we're going to come up with 1373. And that's the answer. Now the reason that I do want to go back, this is just you don't know what you're doing and you don't know what you're doing. B, I want you to understand what they've done here. This is okay. This is actually a legitimate journal entry. What they've done is they've taken the employer's portion, which is $1,125, and then they've taken the employee's portion of the Social Security and Medicare taxes, and they've added them together to come up with this $2,250. But that's not what the question asks. The accrual of the employer's payroll taxes. So we're only concerned with the employer's portion of the Social Security and Medicare tax. And then we also said from the previous question that unemployment taxes are solely the responsibility of the employer. So the unemployment taxes were the $248. We add to that the $1,125. We get $1373. Okay, so we got one more question here. It says, assume that Social Security taxes are payable at 6% and Medicare taxes are payable at a rate of 1.5%. with no maximum earnings, and that federal and state unemployment compensation taxes total 4.6 on the first 7,000 of earnings. Okay? All right. If an employee earns $2,500 for the current week and the employer's year-to-date earnings, the employee's year-to-date earnings before this week were $6,800, what is the total employer payroll taxes related to the current week? Okay? So we got to make sure that we use the right number. So my question to you is, how much did the employee earn? The employee earned $2,500. Okay? That's how much the employee earned. So, with that in mind, now the employee is going to have to pay 6% Medicare, 6% Social Security and 1.5% Medicare. But the employer is also going to have to do that. So if this were me, what I would do is I would take the gross earnings, $2,500, And I would just take 6 and 1.5, and in my mind, I know that that's 7.5% or 0.075. Okay, these two figures here equal 7.5%. And what we're talking about with this is the employer's portion of Medicare and Social Security. 2,500 times 0.075 equals $187.50. But that's not our answer, because we're not finished quite yet. Let's move that right over there. We're going to also, the employer is also going to have to pay. See, there are limitations on those unemployment taxes that are paid, particularly at the federal level. In fact, $7,000, I believe, is the limit. But we're making this simple, and we're kind of, generalizing here. So this 4.6% is taxable on the first 7,000, but we've already taxed 6,800. So what we have to do is we have to take the 7,000, which is the cap, the earnings cap, and we have to subtract out what we've already paid taxes on, and we come up with $200. There's $200 of this 2,500 that we're going to have to pay 4.6% on. So if we bring our calculator back over here and we take $200 times 4.6% in decimal form, we come up with $9.20. Okay? So I think you can see this. $9.20. Okay? We've got our 920 here already. We add back in that 187.50. $196.70. And that is our answer. All right. And that'll do it for this week's handout on payroll liabilities.